Good evening, everyone. Welcome back to another video. In this video, we're going to discuss subdivisions. Right? This is where everyone gets confused, and Elliott wave analysts wonder what is happening in the markets at this point of time. Now, in textbooks, this is not available. In textbooks, they give you a general explanation, and you are expected to figure it out in the live markets. This is one of the examples which we are witnessing nowadays in Nifty. We had a very good rally from the 14th of August, 14th, 15th of August. If those who remember, we had a time zone on 16th, right? On the 16th morning from 9:15 to 9:45, we had one time zone where we expected a sharp rise in the market. Yes, we got a very, very sharp rise so far, and that's more than 1,000 points plus. It's a very good move, sure. But many people are facing challenges in identifying the waves here. All right. So let me just begin by telling that this video is for the underground traders group. They have sufficient training and they have sufficient practice to understand what I'm trying to tell them. And those who have not yet studied the Elliott Wave Master course, it is very, very important. Only after you study that, you will be able to understand what I'm trying to tell you here in the video. All right. As promised, I always make all these videos public. Even the private group videos are made public just for the sake of learning. Those who are learning on their own, they can refer these videos if it is necessary for them. All right. Now, let's get into the main topic. It's called subdivisions. Now, extensions, you can also call that extensions, no problem in that. Usually, extensions are seen in wave three. All right. We have wave one, wave two, wave three. Usually, we see extensions in wave threes. Question is, how do we identify that in the live market? There is no rule. All right. That's all question. The textbook tells us that it can be wave 3.3 extended, it can be wave 5 extended, right? It can be this wave 5 extended, right? All that is mentioned in textbook knowledge. But in the live market, this is something very confusing and we must identify that. All right. So let me give you some ideas of extension and then we will discuss levels of extension. After that, we will use these concepts in the market to identify what is going on in Nifty actually. All right, 15-minute, 5-minute time frame. To get proper clarity, we will try to reverse engineer the counts instead of starting from a low and then counting each wave high, right? Instead of starting from some high, then counting each, instead of this, we will identify some pattern and then we will reverse engineer the wave. All right. So let's begin with subdivisions. In your textbook, I think this is very clear that wave 3 will have internal wave 1, 2, 3, 4, 5. Right? I have discussed this everything subwave theory in the Elliott Wave Master course. I think all of you have studied that already. And right now, I'm directly addressing the underground traders group. So those who are watching for the first time or those who are watching from the public groups, please try to understand. I'm trying to directly talk with the underground traders group members. So I'll be in the mode of trying to explain something to them. If you do understand it, all right. If you don't understand it, watch it again. All right. So let me clarify this. We have been tracking the GIF Nifty, right? We discussed the last time GIF Nifty. Let me just pull up the chart of GIF Nifty once. Yeah. We were over here, I think. Let me just zoom out a little bit. Right? We were somewhere over here at this point. All right. At this point, we had two options. One, we wanted a drop. And like I said, depends on how deep the correction comes. Market will decide what is the next path of GIF Nifty. All right. We wanted one of two things, one of the sharp rally higher or else a dip in the market and then bounce higher. What did GIF Nifty do? It gave a sharp move. This is, I think, 6:30 a.m. in the morning. It went 200 points down, right? Negative 200 points down, and then suddenly rallied again for 200 points. We don't know what is happening in the global scenario, who is the buyer, who's the seller. As per our understanding, we wanted some correction and we got it in this chart alone. Now, GIF Nifty, the traders of Indian markets don't trade that, but then we must understand what is actually happening there also. Now, coming back to our subdivisions in the market, this is one basic subdivision, right? I think this is very clear. Wave 3 basic subdivision. wave 3.1, 3.2, 3.3, 3.4, 3.5. This is basic subwaves. Now, what happens sometimes is that within this wave 3, this is not always you'll see this, but it happens a lot in stocks, right? Stocks especially. In index, it does not happen much, but this level of what is happening in the market, the small, minute trades, very simple. There's a good chance what Nifty is doing right now is it is subdividing again and again. Let me show it to you in a better format. Wave 3.1, 3.2, 3.3.1, 3.1, sorry, 3.2, 3.3.1, 3.3.2, 3.3.3, 4, 5. Okay. Yes, this is a little bit confusing for some people. I'll explain it to you. Don't worry about it. Okay. Right now, very simple. Let me draw this so that you'll understand it better. If this is your 3.1, 3.2 wave, then the next wave started is 3.1, correct? 3 point, the internal ones, 3.1, 3.2, 3.3.1, which is breaking down. Let me change the color, it'll be better. Let's put it as a red. Okay. Then we have what? The internal waves of that. 1, 2, 3, 4, 5. All right. What I want to explain here is the levels of subdivisions. Sometimes the market can, it is not very common, but I'm seeing this kind of move after a long time. There's another perspective to it also. We'll discuss that some other time, but right now, try to understand what's happening. So if this is your wave 3 starting from here, and this is your 3.1, your 3.2, all right, casual, no problem. Then what do we expect? A wave 3.3 and then finish. Here, if this is your 3.3 and 3.4, right, market is in a subdivision mode. What is happening is within this wave itself, market is making wave 1, wave 2, wave 3, wave 4, and then the last bit of wave 5, which is your 3.3 end. So what are you understanding? This is the second layer of subdivisions. We know market can do extensions, right? Where in wave 3, sometimes it happens. Now within this wave, so the first itself, we are where? We're in the blue wave. This is the main wave. Okay. Then we go down one more layer into the yellow. Then we go into another red color, the pink or red, whatever you want to call it. Now we are in another layer inside. Right. This is, I don't have the colors right now, but anyway, I hope you can clearly understand what I mean to say, that there is a possible again subdivisions within this wave 3. Okay. So this is a multi-layered extension which is happening in the market. It happens most likely in wave 3. As a trader, once you understand wave 3 is going on, I have taught you this very, very clearly. All you need to do is wait for 3.4 wave. That's all. Don't need to study everything, A, B, C, D, F, A to Z. Don't have to mark everything. Why? Because once a wave 3 starts, right, we never try to stop it. What happens in the market is 90% Elliott wave analysts who go and see textbooks or who follow on social media and YouTube, what they do is they just mark 1.68, 1.618 Fibonacci extension or 2.618 extension, and they think, yes, market wave 3 has to go till there. 90% of them don't understand that you never stop wave 3s. Okay. You never mark the end of wave 3. After a 3.4 wave finishes, only then you have to look for a 3.5. Only then you will get clarity. Yes, market will pause there. All right. I think this is the theory which all of you have already studied in the advanced concepts. Again, underground traders, those who are public, the public is watching underground traders group is only accessible to the advanced concepts, because in underground traders group, that is the UT group, we use time analysis of different instruments, price analysis. Okay, so advanced price analysis, you have to learn it on your own. All the material, all the content is provided in the advanced concepts group. All right, and then you will be able to understand time. Without this, there's no use of time. Okay, so all those who joined the advanced concepts recently, I hope you understand what I'm trying to tell you. Your focus has to be here, not on trading. Your focus has to be first on understanding advanced concepts, applying them. Later, as I'm guiding you, right, in the group, what to look at, what not to look at, that you can apply slowly. Again, trading, I don't encourage anyone directly go into the trading. I'm not a SEBI registered analyst. I am only trying to explain some concepts which I know. All right. So demo trading is even better. Right now, I hope this is very clear what I'm trying to explain here. There is a don't have to worry about marking each every wave. Right now, just understand that there is a possible subdivisions which happen like this, and this is the theory part only, right? So 3.1, 3.2, 3.3, 3.4, and 3.5, where your wave 3 ends. This is basic. Inside that, there's a wave 3. Inside wave 3, there's another wave 3, which is subdividing. All right. So we are somewhere in this part right now. We cannot pinpoint it directly because sometimes waves, sometimes what you think this 1 2 does not happen like that. Sometimes directly market gaps up. Okay, this is also, I've taught you this in the intermediate course. In the live market, you'll see textbook, you will see 1 2 3 4 5. Okay, but sometimes in the live market there is no 1 2, directly market gaps up in the form of wave 3, and then we go for a wave 4, wave 5. This public does not understand. This public will not understand. They'll start marking this as wave 1 and wave 2. This is a wrong method of marking, right? You cannot mark this like this. So for now, the idea of subdivisions should be clear. All right. Why do we, this is not the only, even this can have multiple subdivisions inside, right? So don't worry about the layers. You cannot predetermine. Let me tell you again, you cannot predetermine the levels of subdivision. You have to let the market decide what it wants to do. Very simple. All right. So let's get into Nifty right now first. And to determine the counts, I think all of you already understand that Nifty is not making proper counts here, meaning the internal waves are confusing for many. Since we have advanced concepts, we have some training that we can understand. The regular folks cannot, what they do is, you'll see on many Twitter handles, or you can see on YouTube channels, what they do is they just mark higher time frame. They'll say, okay, this is 1 2 some 3 there 4 5 like this. They'll mark, put some Fibonacci retracement levels, and they will try to show that they know something in the market. They know how to capture turns, but they cannot go down and mark each and every point here. All right. So my point of explaining this is very simple, that you can do it. Since you have the help of advanced concepts, you can do it. All right. Now, very confusing for many what happened in Nifty. Why is there a gap up? Let me go down to 15-minute time frame first. Right, a gap up, wild moves in Nifty, straightforward move, no internal move, no sub waves are not clear. What is happening? So I've taught you already. I've taught you this before. There are three things you can do as an analyst. You can look for a bullish count. Okay, you can look for a bearish count. Then you can look for the third option, which is wait. Okay. Sometimes when the market is not clear for you, you have to do this. You have to wait. Again, since you have advanced concept members, you can easily identify that, okay, shorter time frame, I need to wait for clarity. Larger time frame, I know it is in a wave 3. Okay, these are the two ways you can identify the waiting period. Shorter time frame, I need to wait for clarity. Larger time frame, right, I know it's a wave 3, right? So these are the different kinds of things you can do. Looking at Nifty right now, Very simple. What I'm doing here is I'm reverse engineering it, meaning I see a simple potential ABC pattern, right? Like I told you, we are not some random YouTube channel we just mark and leave because we want to finish our marking. We don't do that. We have to verify using our indicators also, right? The methods, the concepts, everything we have to verify. But in this video, I won't go into the indicators because it's a public video. I cannot disclose them. Here, very simple. If this is a ABC irregular flat. Okay. If this is an ABC irregular flat pattern, then what? So this can be, before that I see what? A sharp trending move. So this can be some degree of wave 4, correct? This can be some degree of wave 4. All right. So in this case, I see a sharp move from here. So where is 3.4? I can't see 3.4. So for now, I'll take this as 3.4. Okay, I'll mark this as 3.4, some degree of wave 3.4 from here. All right, keep that in mind. And then what next? A straight up move. Okay, after a flat, irregular, or expanding, whatever you want to call it, I see a fast up move. Done, no problem. This is valid because we know in theory, what did I teach you? After a flat correction, can be irregular flat, flat ABC, whatever you want to call it, uh, expanded flat, everything. What happens? The market goes very fast. There's a sharp move after that. That's why this is a low risk, high probability setup. Okay, that's why flat patterns are low risk, high probability setups. Now, simple, we had a fast move till here. So if you're taking this as 3.4, some degree of wave 4, okay, and then what? Some degree of wave 5, okay. Then the next pattern is very confusing. Why is it confusing? Why? Because market falls down, it goes like an ABC pattern up. Okay, it goes like an ABC pattern up. So if this is 3.4 and this is 3.5, wave 4 cannot be so small, correct? Wave 4 cannot be so small. Wave 4 is always greater than your wave 3.4. Sometimes what happens, suppose this is your wave 3.4, okay, we know both are some degree of small wave 4, some degree of wave 4, they can go sideways also. Okay, they can go sideways also. So it cannot finish with a small degree of small either time correction or price correction. So price small dip cannot be wave force. All right, they have to do some move in the market. So in this case, there's a good chance that market made an expanded flat pattern here as wave 4. Okay, so this point should be very clear. And then after this, if this is wave 4, if this is 3.4, okay, what did the market do? It retraced everything of last impulse, 3.5, A, B, C, 4C. There is nothing but your wave 4 completes here. And then we get a fast move again, irregular flat, expanded flat pattern, and another fast move. All right. But is this enough? Is this enough for us? Is this enough? Are we always right? If we do this method, is it always correct? So I've taught you before, I've told you that you always cross check once with your futures chart, futures or gift nifty, anything, whatever you want to follow. In the futures chart, same pattern. This was an ABC. Okay. This was an ABC. Let me just check it once. Okay, this is low is made around 24,981.05. This is 24,981. 1 second. Both are equal lows, is it? Then this has to be higher. Yes. So this is an irregular flat pattern. The same thing, same pattern, same time zone for Nifty futures. Okay. This made an irregular pattern, fast move higher to complete it. So this is some degree of wave 4. What am I doing? I'm just comparing my ideas with Nifty futures chart. All right. Then If this is some 3.4, 3.5, here, should I take this as wave 4? Or should I take this as your wave ABC? And here. So there's a distinction here. There's an issue here. What is the issue? That market, whether it is making wave 4 over here or wave 4 over here. Okay. So it is giving us two options. No problem. In that case, then what is this? What is this point? In that case, we must measure this once. Okay, it is less than 1x here. Okay. So if you want to say straight gap up into wave 3, wave 4, wave 5, all right, this is one impulse move. So in that case, it gives us two ideas, right? So from here, wave 1, wave 2, wave 3 is over here. Okay. So wave 3.3, 3.4, 3.5, simple. Then your fourth wave is over here and fifth wave completed. So from here to here, one single wave is completed. All right, this is one option. What is the other option? The other option, this is again Nifty futures chart. The other option is wave 1, wave 2. Okay. Wave 3 got over here. 3.4. So sorry, 3.4 here. 3.5, 3 here. Expanded flat as 4. And now wave 5. All right. So whatever you take does not matter. Whatever you take does not matter. Let me just put it in marking for you so that it'll be easier for you. 2, 3, 4, 5. All right. So what have you done is you have marked this is one case, one scenario. And then what are you marking? The previous wave before it. If you see the previous wave, there is a small correction here. You take it like this. Okay. There is a small dip here. And then you have one entire large move, an impulse, right? Drop down for a correction. You know what to do here. You know how to check the wave 4 requirement. What indicator here? Check that. If this is your wave 4 and if this is wave 5, okay? If this is your wave 1, 2, 3, 4, 5, then till where can it go? Let me check that again for you. We'll mark it here 1 second. This is your 1, 2, 3, 4, 5. This is again the first scenario only. Okay. If we're starting only from here, we're not going from anywhere else. There are other subdivisions, you can do it on your own later, but just understand the idea here, okay? At this point here, if you're taking this as a wave 5, if that is the case, then the first case tells you that market has already crossed what? Your 1x. So this is in a hyper extension state. All right. So this is in a hyper extension state. What we know is if the market goes above 1x, we usually do not consider that as a wave 5. We consider as subdivisions in the market. All right. So what is the other scenario? The other scenario we have, sorry, this is a mistake I made here. 1 second, hold on. I took the measurements wrong. This is the case. Yeah, correct. I took earlier from this point. This is wrong. I should take it from here. Okay. So I have made the adjustments. Now you can see it is near your 78%, right? So 78% extension. So wave 5, 78% extension. What is the internal wave? It looks like right now it looks like a 1, 2, directly 3, right? Like that, or it is a pump scenario. Okay. So right now, what limitations do you have? Do you have 490? This is your futures chart. We'll go down to a spot chart, don't worry. So basically you understand till where we have to measure, what are we looking for, how from one one exact point, which is your just one pattern, right? We have decoded the previous wave and the possible next possible path. Okay, this is your futures chart. Now let's go back to a spot chart. Let me go back to the spot chart. All right, from the spot chart right now, same thing, not a big difference. Let me just mark the wave for your clarity. Take this as wave 1, wave 2, wave 2 over, wave 3, wave 4, and wave 5. Okay. Again, it varies from where you consider wave 3, wave 4, but overall does not matter. We are heading for a small minor correction. Now, correction can come sideways or else it can be a dip, price correction, or else time correction, not a problem. That depends on the market. So right now, let me just mark it for you again. Wave 1, wave 2, here 3, you mark it as 4, 5. Now here I'll tell you what is happening. We saw in the spot, in the futures chart, we saw that market was at this point here. You saw that it was almost an impulse, right? But in the spot chart, you will see that this point here. Here you saw it is 78% extension, right? Directly wave 3. But in the spot chart, you see it is almost touching your, it has crossed your 1x. So usually we do not consider this, right? We do not consider this when it crosses 1x as a wave 5. It is not written in any textbook. This is what I have experienced. This is what I have told in the Elliott Wave Master Course also. Again, people may agree, people may disagree. It's up to them. This is what I follow, and those who are following me, I've told them this is what I follow. They are free to choose whatever they want. You guys are free to choose whatever you want. This is how I'm marking it. So right now the question is, if this is not wave 5, then there is a good chance this is an ABC pattern, correct? There is a good chance ABC pattern with your A here, B here, and C, right? Your expanded, right? Expanded A, B, C. So what is the previous wave? Previous wave is bullish before the expanded. And after this, again, wave has to be bullish and it has to be very fast. Why? Because this is a flat pattern. What happened in the market? Market gave a very, very fast move. And then right now, right? Market has given us a very fast move. So this is my primary expectation right now. So wave 1, wave 2, wave 3, wave 4. 1, 2, 3, 4. 1 second. I'm just making a small mistake here. 1 second, give me a minute. One, two, three, 4, and 5, right? Right, and this will complete. Okay, so this is one of the possibilities again, and this will complete your move on the top. So how do we calculate the length for this? Very simple. If you're looking for this pattern, okay, if you're looking again, this is the first case. In spot chart, this looks different. On futures chart, it looks different. So we'll have both the cases. So this is a final analysis which I'm giving you right now. The low on a 15-minute chart, Nifty spot, from the low of 2400, 24,000, sorry, 24,771. All right. From the low of 24,771, if we are moving in an impulse, right, it has to be less than, let me just measure it and see how far it is coming. Okay. So right now, first case is that this is your wave 1, wave 2, wave 3, wave 4, wave 5 done. And it should not cross 25,300 and 56. This is your first level, 25,356. Okay. This is your first level you're going to watch. If market crosses this, okay. If market crosses this, so this is done 25 market. Either this was a complete pump move. You know already what happens after a pump. At least 78% retracement has to happen of the entire pump. All right. So that you know minimum. It can come straight line. Usually it takes the same time. The amount of time it goes up, it should come back in the same time. Now the question is, you see a market, okay, it's going sideways here. Then do you understand whether it's a pump or not? Because if this is a pump, it has to come back down in the same time. Okay. This is the first scenario. First scenario is market without crossing 25,356. It should come back down for correction. This is one scenario. So if that happens, then your this count becomes valid. This is your wave 1, wave 2, right? Wave 3, wave 4 will come here, 38% whatever, and then we'll go for another high. All right, done. What is the other scenario which I told you? The other scenario is here at this point here. Everything matters at this point. In this point here, in this another scenario, is that your wave 4 completed here. Again, I told you again, wave 4 cannot be small, but we are taking it just in case something else happens. If market breaks 25,356 and goes higher, okay? This is what I'm telling you, if it happens. In that case, wave 5, the small 5 completed here. Okay, why should we take that? Why are we doing this kind of scenarios? Again, I told you, you'll have to use your indicators. In that case, you will understand very easily. Okay, so in that case, a wave 3 gets completed here. In both cases, this is some degree of wave 5. Some degree of wave 5. In that case, just measure the length. Okay, in that case, just measure the length. Here I'm taking as 1, 2. So I'll take this starting point as, you can take it as 24,680, 24,680. Okay, or you take this point here, 24,655. Does not matter. So either way, you will see that there's a good chance market can reach all the way up to 356. So first 356, without breaking 356, if we go down all the way for correction, then this is your first scenario. This is the second scenario. In the second scenario, market can go all the way up to your 388. It can cross that within 388 to 490. Okay, within 388 to 490, market can take a pause. So let me just mark that for you. Within 388 to 490 zone, this is the second scenario. Okay, market can take a pause and then we might see some correction. So immediately what will happen tomorrow? Two cases. If this is a pump which is finished in the case 1, market will immediately drop here. Okay, it will immediately drop for 78% at least retracement of this entire pump. If the market is going sideways, slowly, time pass, obviously you know that it is not a dump. So whenever pump comes, there has to be a dump. When there is no dump, you understand market is still planning to go higher. So in that case, as soon as price crosses your 25,356, you must understand this is the second pattern which we are looking for that is in play, right? In any case, both cases, whatever happens, market is looking for a small dip to come. We're looking for a small dip to come in the future. There are some heavy astro dates. There are some heavy global events which are coming in the market. We know 11th is the CPI data, and then 17th is again your Fed event, FOMC rate decision. All that is there. But anyway, point here is that you understand this kind of volatility is going to kick in the markets. And I've seen energy charts of many of the traders. Most of them have a negative period coming in the decisive part, which I told you, from 11th to 19th or 11th to 18th. Many traders have a negative very negative time zone here. So be careful, guys. I know you have your energy charts. So how to navigate this? You have made your own plans: conservative, semi-conservative, aggressive. I think you have seen the energy chart video. I'll put it in the description anyway. So you have a look at it again. You make your own plans. If this is a negative time for you, I think you can navigate it based on the skill. I've shown examples in the energy chart video. So watch that. All right. So right now, I hope this concept is clear of subdivisions and how we reverse engineered a move, right? To counts. It is not necessary that you always find count from the starting or end. You can also reverse engineer it. All right. Sometimes what happens, this market does not give clarity of moves. All right. So if this is your wave, for example, you started from here, right? This is another correction part. So you can take like this wave one, wave two again. All right. Again, in terms of that, how I showed you multi-layered your subdivisions, you can apply that here also. All right. Don't worry. For a trader, for suppose who trades weekly options, monthly options, very simple. Once you understand to navigate small bits, okay. Once you understand to navigate small bits, you can directly navigate big moves in the market. Okay, you can directly navigate big moves. So you can either focus on the smaller ones. This is where your practice comes. This is where your chart reading experience comes, where you're comfortable at, right? Some people, like I told you, are comfortable at reading 1 hour chart, right? Some people are comfortable thinking, oh, this is 100 points move, this is whatever. Everyone's temperament is different. Remember that. I told you many times, people have many people come to me for two reasons mainly. First, they lost a lot of money. They lose a lot of money because of scammers, frauds. Some people, uh, teach them some strategy, take in the name of strategy, they take some textbook knowledge and just leave them. Sometimes classes don't happen, whatever. Again, I'm not calling out anyone. I'm just telling people who lose money, okay, lost a lot of money, come to me to learn. Okay, they come to me to learn. Next is people who have a stable life, financially sound, right? It's not a big deal. Okay, don't compare yourself with anyone. Don't worry about money at all. The only thing I want you to focus on is that the mindset, right? So these stable mindset, those sorry, stable income, stable household, everything stable, they also come for one purpose, that is learning. Okay, they want to expand their business. The only difference is the people who lost money in the market, okay, they have one small problem. What is that? They go into a phase of denial. They still look for tops and bottoms. Okay, they still look for tops and bottoms, and when they again lose money chasing tops and bottoms, then finally they will come for learning. Okay, so anyway, final point is learning here. Either you come now or you come 2 years later or 4 years later, does not matter. All of you will come back to the same point of learning. Okay, now after learning is where your journey starts. All right, so all that we'll discuss in the underground traders group, not here and not in the public domain. All right, this is all I have for you guys. I hope this video is very clear and you understand the concepts. Basic idea, we're just making it more advanced and more clear. All right, these kind of videos I don't think you will get anywhere. So if you have watched till here, I request you to give it a like and definitely leave a comment if you find something useful in this video. All right, I hope to bring more videos to you guys. Our family is growing very fast. The retail army is growing very fast nowadays. A lot of people are learning. A lot of people have realized that learning is the path forward. All right, I'll be there for you guys. I'll be there as long as I can, and I'll keep helping you. I'll see you in another video, guys. Till then, take care.